Okay, what is up, traders? What's up, tycoons? Coming at you guys with a viewer request on ticker symbol MESA. This is Mesa Air Group. Now, this thing has been on a tremendous rally as of lately, along with much of the market, but this thing has really been outperforming the market in a very big fashion. Okay, if you take a look here, it's up over 227% from its lows to its highs, from $1.03 right here up to about 340 was the highs, somewhere around 330, 340. Now, there's a couple things we need to be cautious of right now, especially with these really, really big rallies. Okay, the first thing that we want to take a look at is our relative strength index. And if you notice here, what we're doing is we're making higher highs on the stock price, right? So we have a high here, we have a higher high here, we have a higher high here, we have a higher high here as well. So clearly, the stock is in an uptrend and moving higher. But if you take a look at your relative strength index down here, what we're seeing is the exact opposite. We're actually seeing lower highs. So, we have a high here, we have a lower high here, we have a lower high here. So we're actually in a downtrend. We're losing relative strength is what we're being shown right now. We're losing relative strength as the price of this stock continues to go up. Now, this is a term known as bearish divergence. It's an indicator you may see some type of bearish activity in the future. So, what do you want to do? How do you want to prepare for this, right? In case we do get some bearish activity. Well, what you do is you come over here, and these are going to be your Fibonacci retracement levels. Now, the reason that these are so important is because nothing moves in a straight line up or in a straight line down, right? What you do is you get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. Now, you can use this to spot trend continuation or trend reversal. So if you move up, retrace, and let's say you consolidate a little, and then you break through those retracement levels, that's how you can spot a potential reversal to the downside. So we've had this massive move to the upside. We have a little bit of some bearish divergence indicating we could see some bearish activity. If we do get a pullback, all right, our 38.2% retracement level is going to be right here at 2.46. So, if you bounce off the 38.2, that signifies that you're in a strong uptrend, right? So if we pull back, bounce off of here, then that's a sign we could be in a strong uptrend. If we come down to the 50% retracement level, that is going to be your normal uptrend, right? And so if we pull up, bounce back, and we find support around 219, then that would signify that we're basically just in a normal uptrend, not super strong, right? It's not as strong as it could have been if we would have bounced on the 38.2. And then you have these two levels down here. The 61.8, it would basically signify a weaker uptrend. Okay. And then the 76.4% retracement level is what I like to call the fake out level, right? And so a lot of times things can come up, retrace all the way to the 76.4, and people think that this thing is about to reverse, and then ultimately it continues. So, these are really the big major levels you want to pay attention to. But even from where we're at now, that's a pretty sharp drop. Okay. If you take a look at the current price and you drag it down here to your first retracement level, that's about a 20% drop. Okay, then a 28% drop to the second retracement level, a 37% drop to the third retracement level. And if we come down to the fourth, that's a 48% drop. So, unless you were a perfect trader and got your whole position here at $1.03, it's going to affect your portfolio a lot if you, get this big pullback here. Okay, so, ultimately on a larger scale, these are the levels that we want to hold for a continuation higher. Now, another thing we need to be a little bit cautious of is that we're at the top of our Bollinger Bands here. Now, typically, when you're at the top of the Bollinger Bands, you tend to see some type of a pullback, right? And you don't typically trade outside of the Bollinger Bands very much. Now, you can see here that the trend was very strong. Okay, we're trading outside of the Bollinger Bands, and we pulled back into the Bollinger Bands, but we moved sideways and then back up. So if we're bullish here, we want to see, a slight pullback and really just price absorption and consolidation, and then continuing up higher, probably breaking our bearish divergence trend line. If we can break that bearish divergence trend line, that's going to be a good sign. But keep in mind, this green line right here, this is overbought. This is the level for overbought, 70 or above. We're currently at 69.21, so we're just below overbought levels, but we're still, near overbought conditions. Now, typically, as a general rule of thumb, it's not a great idea to buy something when it's overbought, as the chances of a pullback are increased. Now, that doesn't mean that something can't continue to go higher, right? I mean, we see here it was extremely overbought, and what happens is it moves sideways and then continues going higher. So I'm not saying that we have to pull back or that, we can't go any higher, but I would definitely just be very cautious and mindful. Now, one of the ways that you can spot a potential big move to the downside, let's say like a move down to our retracement level, our first major retracement level, which again is about a 20% drop from where it's at currently, is by using the MACD. Okay, so if you use the MACD, this line right here, you want to see this stay above this yellowish line right here. Okay, if this crosses down below, that could be a sign of an exit signal, right? And so you use the MACD for entry and exit signals. If you take a look here, this is when we got our entry signal, okay, and the blue line crossed above, and you can see that was a really good signal for this massive move that we've had in the stock. Now, we haven't gotten a MACD sell signal, but we do have bearish divergence. And if we get a bearish divergence combined with a MACD sell signal, then most likely we are going to have some type of a pullback, right? So just be cautious, be prepared, protect yourself, if you're in this position, and just know some of the key levels that you're looking for, right? A lot of this is going to be noise. If we just pull back and consolidate here, this is going to be healthy noise, and it's going to be price absorption, and some healthy consolidation to ultimately end up going back higher. But if we break below, all right, and we end up getting a MACD sell signal and this bearish divergence ends up playing out, then that's when we could come down and test our major levels. So, this is where I feel, and basically where I'm at on this stock on Mesa. I do these viewer requests every single week. So if you want to see some technical analysis and, have me break down whatever stock, crypto it is that you're looking at, show you guys what signals I see, if I see any signals at all, and some of the major levels to pay attention to, such as these, then all you have to do is comment down below and I'll make a video for you as soon as I can.